Did you buy into the close on Friday? Did you add to your positions as the market sold off in a really massive way? Friday's massive sell-off was, well, breathtaking. When I saw the VIX just spike, it was just, well, uncomfortable feeling. I mean, it was like I saw the setup, but I didn't put two and two together. And when it broke higher, all of a sudden, the market accelerated into a massive sell-off. I mean, it was epic volume. Not epic volume, but epic volatility. And that's where I look at this and I go, I need to refigure my risk parameters, adjust my risk metrics so that I don't get hurt on a long-term basis. Now, like everyone who is probably long anything yesterday, you took a bit of a beating. But you also got an opportunity possibly to buy into a high volume, massive sell-off that came down to some support levels. Now, I use technicals in my trading along with some quantitative measures. And it was bound to happen, according to my calculations. But as fast as it goes down, it'll go back up as fast. My opinion is that we're back down to some support levels. Could we go lower? Absolutely. I mean, 4,400 on the S&P 500 is, well, it looks like a support level there. But where we're at today, around 4,500 or so, looks like we could have a jumping off spot when it comes to Monday's trading. And we could see all-time highs again. If you go back to, say, March or January of 2020, and you draw those trend lines, you see that we've done this over and over again. Now, that wedge that is forming is starting to narrow and narrow more and more. And what that tells me is we could see another all-time high in the coming weeks, coming month, but we are increasing the chances that we will see a good, solid correction. This week, I believe the S&P 500 was down 1.5%, which isn't, nothing to sneeze at, but it isn't also anything to get your, stuff in a wad about. So what am I doing right now to basically prepare for the next couple of weeks? Number one, my positions are dated out at least 2 weeks when it's on my option trades. My crypto portfolio, I'm just long. It's a long-term hold. I'm not buying or selling anything out of it. I'm just holding it because I believe in what it represents for the next coming 12 months or so. When it comes to my individual traded portfolio, where I trade options on the S&P 500, and I've also added some triple Qs options on those, I'm going out 2 weeks, so my delta wasn't as high, which is the relative amount the option will trade versus the underlying stock. So in this case, SPY, which is the ETF for S&P 500, my deltas are right around 0.44. So that means if the SPY goes up $1, it means the delta or my option should go up 44% of that dollar range, or 44 cents. So I don't have a lot of risk there in that case, but it could accelerate pretty rapidly if I saw the SPY go below my strike prices on my options. By the way, that is a trumpet player. I'm here in Forsyth Park in Savannah, Georgia, because I'm dropping my daughter off for her freshman year at Savannah College of Art and Design. And so it's a beautiful area, beautiful city. If you ever get a chance to come here, a lot of historical things here, and they've been able to preserve a lot of the historical side of things. But like anything right now, this city also has volatility. And volatility, to me, is one of the greatest measures of how you can anticipate what's going on with the market. The VIX, in this case, the volatility index to the S&P 500, and then VXN, which is the volatility index to the triple Qs, or the NASDAQ 100, is my leading indicator, and I use some ratios around that gives me some guidelines to where we are at in this cycle when it comes to the up of the S&P 500 or the down of the triple Qs. So as you know, I use the VIX as my indicator of where markets are headed. And over the last couple weeks, the VIX has been over 17 primarily for the whole last couple of weeks. Sorry about the lighting. To me, that is the first indicator that volatility is still high. I mean, if volatility is high on the VIX, well, then you run into the issue of the S&P 500 going down. And if you look at the last couple weeks and how the S&P 500 price action has been, it's been lower highs and lower lows, which is an indicator that S&P was going down. So the S&P is going down according to the VIX, and we saw that on Friday. What I like about what happened on Friday, which is not a lot, because I have taken a bit of a hit to the pocketbook because of this. I haven't realized anything because I'm still holding, and because I'm about 2 weeks out, sorry, I'm trying to get my lighting right here, is that this big massive volatility spike could be one and done. And I believe for the last couple weeks that has been building, and we got the massive spike, volume increasing on selling. And what that says to me is, as we're moving into this when it comes to option expiration, that Monday and the rest of the month could be an epic upside. So this is why I'm still long calls on the S&P 500. Now I'm 2 weeks out, so to the 24th. So if things don't go right, I'm going to be really panicky when it comes to my positions in the SPY. But I believe we have come back down to support. We're going to move higher, and volatility is going to subside and break below 17 and get down into the 15 range on the VIX, the volatility index. We see that, I see, with new all-time highs in the coming weeks, and as we enter the end of the quarter, we end up booking some really, really strong gains. And that's why I'm long and optimistic about all of this. Now, take this in account to what is happening economically. Our inflation is up. We saw that the other day. I saw where rental prices are up 10.3% versus a year ago when it comes to residential rentals, which is squeezing people. That's a form of inflation. But also, the availability of goods is becoming less and less, and that is because of the supply chain interruptions. And as we get to the end of third quarter and we start to see third quarter earnings reports, year versus over year situation, I don't think it's going to be all that great. And so that's when I'll become more and more cautious. I'm still looking for that 5 to 10% correction on the S&P 500 and also on the NASDAQ 100. But I don't think it is this coming week. I think we'll see some big moves higher. We saw a lot of big institutions cover their short positions, I believe, in the last couple of days. And I think you're going to see that protection they put on when it comes to put contracts is going to evaporate, and you're going to see ante back into this market. I mean, you think about it. What was it? The Apple lost $80 billion of market capitalization yesterday on Friday. Well, that's an opportunity possibly to buy. And with them introducing the iPhone 13, according to my daughter, who use it for video and photography, she says the camera's epic and she's buying one. And she's, a college graduate, owns her own little social media business. And when she says she's going to spend money, it's because she's thought it through, she's analytical about it, and she sees benefit in buying that product. And the new iPhone 13, according to her, is going to be a bit of a, not a game changer, but it's going to replace the big camera and increase the quality and value when it comes to her video content and photos just on the phone. We all knew that was coming, but it's one of those things that I look at Apple and go, not that I'm going to buy that stock and not that I'm recommending you buy that stock, but that $80 billion market capitalization erase yesterday could be an opportunity to look at, like in my case, the SPY, which Apple represents, I think, 6% of the overall SPY allocation, an opportunity for upside movement. Okay, a little tidbit for you. Savannah has all these parks, and they're little squares, and they run pretty much, what's the street called? I don't know what the street's called. Anyways, they're beautiful, and it's got a bunch of historical homes around it, shopping, the whole bit. It's really a walking city, and I would recommend, ever get a chance, come spend 2 or 3 days here. It's awesome. Park your car, walk, stay within this, downtown area if you can. Really some great things to see. Both my daughters have gone to school here at SCAD, Savannah College of Art and Design. Haley graduated with a degree in social strategy and management. Basically, it's the study of how to get you to engage and stay longer onto a company's website or retail site, that kind of thing. It's a lot of psychology, mind-blowing. I've learned a lot from her and what these apps are doing to get our face and eyeballs stuck to them. That's what she does for a living. And then Emma, who is starting here as a freshman, is going to study fiber. So that's the making and design of fiber, clothing, materials, goods, that kind of thing. So that's very interesting. The other thing I am tracking is the 10-year Treasury. The yield keeps now going up. We broke through 1.3%, and what that's telling me is less money is buying the 10-year Treasury, so more risk on is starting to happen. And honestly, I wouldn't be surprised if you saw the VIX or the 10-year Treasury jump up towards 1.4, 1.5 range because of the massive sell-off we had in the SPX yesterday. So watching that 10-year Treasury is giving me some signs that risk is coming back on and people are going to start getting aggressive with their equity positions. And because of that, we could see a continuation of this market, the S&P 500, the NASDAQ, Dow, all moving higher through the end of the month. And that's why I'm optimistic. The less money that's going into risk-off assets and more volatility like we've seen over the last couple weeks in the S&P 500 and the volatility indexes is giving me a sign that we are going to see volatility drop and the continuation higher in the equity indexes. That's my take on it. As you all know, this is not advice. This is just my opinion. It's purely educational. But what I'm using, those tools I'm using or indicators I'm using, of course, is the price action in the underlying index, so S&P 500 and the NASDAQ 100. And then 2, the volatility index and what it's doing. And then 3, the price action of the I just mentioned that, right? Yeah. It's price action, volatility, and the volume. And yesterday, volume was higher, and the previous day was higher than the previous day. And I believe, so Friday was probably most likely much higher than Thursday. And to me, the high volume sell-off means people got out of their short positions, capitalized on it, took their protection off, and now you have more opportunity for upside movement overall. So those are things I'm watching. That's what I'm doing this week. Meanwhile, I just want to point out, I just want to say, this is being filmed on September 11th, 2021, and 20 years ago, we had a massive terrorist attack on our soil. And I just want to tell those who have risked their lives to protect our country, thank you so much. There's not enough thank yous and not enough love we can give you, but you are in our hearts. To those parents who have children who have sacrificed their lives for, well, my lifestyle, my freedom, or have kids who are risking their lives for us, hats off, thank you so much. And our love and my love is headed your way. I can't thank you enough. As a parent, I couldn't, personally, I would have a real hard time knowing my child could be leaving. Having lost a sister back in 2014, I know what it's like to lose a family member, a sibling. As a parent, I hope to God I never experience it. And for those who have, I heard for you, I'm sympathetic, and my love is out there for you. So with that said, please give me better lighting. With that said, have a great 9/11. Tell somebody you love them. But most importantly, always live life loud and cherish every moment you got with yourself and with your family. Peace.